The Welcome Mat with your host, Joel Lukes. Good morning and welcome to the Welcome Mat. This is Joel with Frederick Harris Estate Homes and Newmark Homes Houston. Welcome Mat is a blog, videocast, and podcast about beautiful homes and the people who love them, and I'm certainly one of them. I'm here this morning with two of my favorite ladies, Lisa Ashwada with Newmark Homes. She is the marketing director. Say hi, Alicia.
Hi there.
And this is Kathy Tautenhahn from Cornerstone Mortgage.
Hi, how are you?
One of the neatest things that has happened to our company lately is that we recently signed an ABA, an affiliated business arrangement with Cornerstone, and we're very excited about this business relationship. So we just thought we invite Kathy this morning to just talk to us a little bit about Cornerstone and what kind of neat things they have going on over there. Kathy, tell us a little bit about Cornerstone and what makes you guys special.
Well, Cornerstone Mortgage Company has been around since 1988. So we're a big mortgage banker. We've been in the business for a really long time, but we want to create this small town home feel for all our clients. I think that's a really big positive thing for Cornerstone. However, with Newmark Homes Houston, we are an affiliated business arrangement with them now going forward. So we're really excited about working with them as well. But yeah, Cornerstone's a great company, and we take a lot of pride in what we do and how we serve our clients.
I was 13 years old when it started.
I
know. Did I just reveal my age?
Yes, you did.
It's crazy. So, Kathy, how long have you been with Cornerstone?
I actually my background is in the builder business, of course, but I've been with Cornerstone since March.
Excellent. You love it?
I love it. Good people.
I have to tell you, I have done a couple of deals with Cornerstone before we did the ABA, and they were always like incredibly smooth, and dogs were there before time, and it just made our life so much easier.
Yes,
so that's certainly
it's
always
very
my heart.
important.
Every time I say Cornerstone, I'm like, okay, thank God they're here.
I know.
It's been great. So you said Cornerstone is a lender?
We're a correspondent lender.
Okay, what does that mean?
That means that we originate all our loans in-house, but we sell out to a multitude of different investors. We actually have 100+ investors that we work with.
Wow.
So we fund all the loans in-house, but of course we sell them out on the secondary market after the loan closes and funds. The difference between, a correspondent lender and a broker is a broker, they can shop loans, but they have to hand it off to the investor once, it meets the guidelines of the particular buyer.
So a broker is kind of like a middle person.
Exactly.
You would say. Okay. So that means you guys have like hundreds and hundreds of different programs that you can offer buyers.
We did, which makes it, wonderful for us because every buyer, especially nowadays, is different. So we can offer a multitude of different products to each buyer.
Gotcha. When you say every buyer is different, can you tell us like what has been like your favorite buyer of like your best memory of like something creative or something different that you've come across?
Well, recently I had my father gave me a loan from one of my hometown friends, and they wanted to buy an investment property in Lubbock.
Uh-huh.
And I've never originated a loan in the Lubbock area. And it was called a kiddie condo. It was so strange.
What is that? A kiddie condo?
Well, you don't really, it's really old-timey type of loan, but really it was structured for students that moved up to tech or any kind of school. They don't have the down payment. They don't have the credit, really, to do it. So really they're co-mortgagors with their parents.
So the parents actually co-signed for this mortgage?
Exactly.
Okay.
So, but it was really funny because I had no idea how the whole product went, but that's what Cornerstone's so cool. We have an array of different types of programs that a lot of people wouldn't, a broker per se.
Sure, of course. And, Kathy, I think there's a general perception out there, and Alicia, maybe you can talk to this because you see a lot of the buyers that come in through, the website and ask questions. Alicia, would you say that there's a perception out there that they're loans are much harder to get? What kind of questions are you getting out there?
I am getting some questions about, how it's difficult now to get a loan as it was, a couple of years ago with everything that's happened with the economy. I have heard that things are picking up as far as rates go. Can you elaborate on that?
Well, the interest rates are kind of steady right now, and apparently through the end, and it's so speculative right now, anything really could happen.
Well, yeah. Exactly.
I mean, the Fed is buying treasuries, so of course it affects the bond markets, and interest rates are staying really low, which they're saying is going to be happen through the end of the year.
That'll be awesome. Yeah.
But the scare of inflation could push mortgage rates up, higher and higher throughout the next 4 years. It just really depends what happens.
Well, I think of mortgage rates as just going to and getting gas,
Exactly.
People can speculate,
Right.
but you just really don't know what is going to be the next days. That's how I think about it.
Yeah, but it's great right now because the lending laws have tightened up, but mortgage rates have fallen quite a bit. So it's really helped a lot of buyers get into homes that they usually wouldn't be able to.
So is the perception, are loans harder to get? Is there loans out there for people?
There is. I mean, there's loans for first-time home buyers. We have jumbo products. I mean, anything and everything. I think we really need to prepare our clients up front for exactly what's to be expected when they want to finance.
So what are the kinds of things? Like if I was out there shopping for a home, looking around like a lot of buyers do, right? The first thing we look at is the pretty. We looked at the communities. We was like, ooh, the lakes, especially if they come to my community, Lakes of Bell. I mean, the lakes are gorgeous and people are just, totally. I mean, you guys saw it this morning. It's
Beautiful.
Like fabulous.
Yes.
And they fall in love with a house and they're thinking, they bought a home 5 years ago, 7 years ago, and they know they can do an 80-15-5 and, they can do stated and all these kinds of things. Exactly.
Right.
And we know now that we educate our buyers a little differently, that they know that, things have changed. But if you could give advice to buyers that are looking for homes now in order to prepare to get a mortgage, what are the kinds of things you would tell them?
Well, I think the most importantly, you need to know what your credit score is.
Okay.
Have to. And so you just can't go shop around to mortgage companies and look at interest rates and all the costs associated with financing. I think you need to know what your credit score is. You need to know what down payment you qualify for. It's just all about setting the right expectations. And I think that's what you need to do first and foremost before looking at any home.
Gotcha. Would you say that now the requirement, banks are requiring higher credit scores for the loans?
Well, yeah, lending laws have tightened up because right now it's such a risk because of the state of the economy. So you need to have, there's two types of loans. You have your government insured loan, which is FHA, which allows for the lowest down payment, which is 3.5%. And you have to have a minimum FICO of 620.
And those loans can be up to what amount?
Well, the loan amount cannot exceed $270.50 for FHA.
Gotcha. But the sales price of the home could be higher.
Exactly. Just as long as the loan amount financed does not exceed $270.
So I can, for example, sell a $500,000 house, and then if somebody wants to put enough money down to bring to $270, they can do an FHA?
Which is great because it offers really low interest rate and low mortgage insurance monthly. So yeah, if obviously if the sales price is that high, they still would have to pay mortgage insurance and tax. They could not escrow their taxes and insurance.
Gotcha.
I mean, they would have to escrow their taxes and insurance meaning that they would pay taxes and insurance monthly
with the mortgage
versus paying with the mortgage company versus paying them annually.
Okay, gotcha.
Then you have your regular conventional loans, which is a minimum of 5% down now.
Okay.
And a minimum of 660 credit score. I would say 740. I mean, you could do 660, but you'd have to put a lot of money down, and the interest rate would be affected by the low credit score.
I mean, 660. I can tell that most of our buyers are going to be above 700 credit score.
Right. Most definitely.
Yeah, most definitely. So I think definitely there's some good products for them available out there.
Oh, and interest rates are great. Yeah.
Yeah, I actually was talking to another mortgage officer about investment loans, and they were telling me that they could do something at like a 5.5 for a 30-year fix. I mean, that's pretty. Yeah, that's pretty unbelievable.
Right.
Well, I quoted someone yesterday for ARM products aren't really out there right now. I mean, a lot of people aren't wanting to finance adjustable rate mortgages, but the interest rates were like 3.75 for a 7-year.
That is incredible.
A 7-year ARM, meaning after the 7 years it would adjust. But for some people, first-time home buyers, they know they're going to be in their home for less than 7 years.
So they might as well do that, right?
And they might as well do that, and then. So it works out. Each, like I said, every customer is a little bit different, but.
Okay. So it's nice to hear, obviously, that we would assess you guys would assess their situation and then kind of figure out what program would be best for them.
Yeah, and I also like to, when I do pre-qualify buyers, I like to offer them a multitude of different scenarios based on their credibility.
Gotcha. Do you get a lot of questions about the first-time home buyer tax credit?
A lot of questions.
I bet.
Well, I've come into a lot of situations where maybe the co-signer had a home in the last 3 years, and so they want to know if they can, maybe the first mortgagor wants to know, well, can I still get the tax credit? So there's tons, and on our website, KathyTautenhahn.com, that answers a lot of those questions. But yes, it does expire as of right now, the end of November.